Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us do now one question of single entry where trader has started a new business. As we are aware, under single entry system, trader don't maintain proper books of accounts. When he starts a new business at the end of the year, how he can find out profit or loss? Ajay started business on 1st April 2011 with a capital of rupees 1 lakh. On 1st July 2011, he borrowed 40,000 from bank for business. This is a loan taken for the business and introduced further capital of rupees 15,000. This is called as new capital introduced or additional capital introduced by the proprietor during the year. This new capital or additional capital introduced is required to be deducted while calculating net profit or loss for the year. This loan taken from bank will be reflected as liability at the end of the financial year. On 31st March 2012, his position was as under. Now this information will be using to prepare closing statement of affair. Cash balance 6,000, asset. Stock 94,000, asset. Debtors 70,000, asset. Creditors 60,000, liability. He had withdrawn 20,000 for personal use. This is drawings. This amount will be added while calculating net profit or loss for the business. Ascertain his profit or loss during the year. On 1st April 2011, he started business with capital of rupees 1 lakh. This 1 lakh is opening capital. So here we are not required to prepare opening statement of affairs because already we have opening capital in question. We are required to prepare now closing statement of affairs so that we can find out closing capital of business at the end of the year. For Mr. Ajay, statement of affairs as on 31st March 2012. This is closing statement of affairs. This is prepared like balance sheet. First part will be liabilities and second part will be assets. The basic purpose of preparing statement of affairs is to find out closing capital. By using the available details, we are required to record closing assets and liabilities. Cash balance 6,000. This will be recorded on asset side. Stock 94,000. This will be recorded on asset side. Debtors 70,000. Creditors 60,000. This will be recorded on liability side. On 1st July, he borrowed 40,000 from bank. This is a bank loan of 40,000. This will be recorded on liability side. Loan from bank 40,000. We have recorded assets and liabilities as per information given in the problem. Let us find out now closing capital. Total of asset side is 1,70,000. So total liabilities should be 1,70,000. Here we have creditors and loan from bank, total 1 lakh. 1,70,000 minus 1 lakh. Balancing figure we are getting closing capital. Total of assets minus outside liabilities, we are getting balancing figure 70,000. This is closing capital at the end of the year. We got 70,000 by preparing closing statement of affairs as on 31st March 2012. For Mr. Ajay, let us prepare statement of profit and loss for the year ending 31st March 2012. This statement is prepared to find out profit or loss when books are kept under single entry system. We are required to start with closing capital of business at the end of the financial year. Just now we have calculated closing capital by preparing closing statement of affairs. Statement of affairs prepared as on 31st March 2012, that is closing statement of affairs, shows closing capital 70,000. To this closing capital, we are required to add any drawings made by the proprietor during the year. Here we have information. He had withdrawn 20,000 for personal use. This 20,000 will be added. Closing capital 70,000 plus drawings 20,000. It has become 90,000. Now here we are required to subtract any additional capital introduced by the proprietor during the year. Here we have information introduced further capital of rupees 15,000. This 15,000 will be deducted. $90,000 minus 15,000 additional capital, balance is 75,000. From this we are required to subtract opening capital. Ajay started business on 1st April 2011 with capital of rupees 1 lakh. Here opening capital is clearly given in the question, rupees 1 lakh. This will be subtracted. $75,000 minus opening capital as on 1st April 2011, rupees 1 lakh. So here we get negative figure 25,000. This negative figure indicates there is net loss during the year, rupees 25,000. If this figure would have been positive, it would have been treated as net profit for the year. This is net loss for the year, rupees 25,000. In this question, we have learned how to find out profit or loss when books are kept under single entry and new business is started by the trader and we have only details of closing statement of affairs. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.